Let me ask you something. Have you ever checked your investment app and it felt like you just got punched in the gut? Red, red, red. Every stock down. Your portfolio bleeding. And the news? Screaming, crash, recession, global meltdown. You sit there thinking, should I sell? Should I buy? Should I just delete the app and go live in the woods? Hold up. Take a breath. Because here's the truth. Some of the wealthiest people you admire, they made their fortune during a stock market crash. So if you're seeing red right now, this might be your moment. Let's break it all down. Why markets crash, why it's normal, and how you can turn panic into profit. Let's go. Why do markets crash? All right, first things first. Why do stock markets crash? There are three big reasons, and you've got to know them cold. 1. The bubble pops. Think of the market like a balloon. People get hyped. They throw in money. Prices soar, way above what companies are actually worth. Boom. Bubble. Then reality hits, and pop. It all comes crashing down. Example, the dot-com bubble, late 90s. Everyone's buying internet stocks. Didn't matter if the company had zero revenue. If it had .com in the name, people threw money at it. NASDAQ, up over 800%, then it crashed. Hard, down 80%. Trillions lost. Took 15 years to recover. Lesson? Hype is a liar. 2. A weak economy plus bad policy. Inflation's out of control. People stop spending. Businesses start shrinking. Earnings fall. Stocks follow. Then the Fed steps in. Hikes interest rates. Now it's even harder to borrow money. Businesses stall. Fear spreads. Markets dive. And every time that guy from the Fed speaks, investors start sweating. 3rd, black swan events. These are the monsters under the bed. The stuff no one saw coming. COVID-19, September 11th. Financial fraud. Wars. March 2020. The market tanked over 30% in just weeks. Not because companies suddenly sucked, but because everyone panicked. Are crashes normal? Now you're thinking. Okay, Leo, that sounds terrifying. Is this supposed to happen? Yes. And here's the kicker. Stock market crashes are completely normal. Markets move in cycles, just like seasons. You've got pullbacks, down 5 to 10%. Happens every year. Corrections, down 10 to 20%, every 1 to 2 years. Bear markets, down 20 to 40%, every 5 to 6 years. Crashes, down 40% or more. Once a decade or two. It's like the market's heartbeat, ups and downs. The key is not to flatline when things get rough. Here's some perspective. 1973 oil crisis. Market fell 50%. Took 7 to 10 years to recover. 1987. Black Monday, 22% drop in one day. Back in 2 years. 2008 financial crisis, down 50%. Recovered in 4 years. COVID crash, down 30%. Recovered in just 4 months. Different causes, same pattern. Market falls, market rebounds, market grows stronger. Who loses? People who panic and sell. Who wins? People who stay calm, stay smart, and buy when everyone else is running scared. How to turn a crash into your big opportunity. Now let's flip the script. Here's how you turn a crash into a wealth-building machine. Ready? Mistake 1. Panic selling. You see red. You freak out. You hit sell. Stop. You haven't lost anything until you sell. If you own solid, profitable companies, they'll bounce back. But if you sell in fear, you lock in your losses. So rule number 1, don't panic, don't sell, don't quit. Mistake 2, trying to time the bottom. Everyone wants to buy the dip. But let me tell you, even Wall Street pros can't predict the bottom. You wait too long, you miss it, you buy too early, you get hit again. Here's what works instead. Dollar cost averaging. You invest the same amount regularly, no matter what the market's doing. That means when prices are low, you're buying more. When prices are high, you're buying less. Simple, smart, stress-free. Mistake 3. Buying cheap garbage. Just because a stock is down doesn't mean it's a good deal. If the business is garbage, no revenue, no product, no plan, it's not a bargain. It's a trap. Buy great companies with real earnings, low debt, strong management. Let's talk Amazon. In 2007, one share cost $90. During the crash, dropped below $40. You could have picked up 25 shares for $1,000. Fast forward to 2021, those 25 shares were worth over $75,000. That's 75x your money. Because you bought quality during the panic. Mistake 4, putting all your eggs in one basket. If all your money is in one stock, or even one sector, a crash can wipe you out. Smart investors diversify. Tech, healthcare, consumer goods, energy, even different countries. Too hard to pick? Use ETFs, index funds. They spread your money across dozens or hundreds of companies. Less risk, same long-term gains. Mistake 5, following the herd. This one's dangerous. The herd sells, you sell. The herd buys, you FOMO in. But investing isn't a group project. Do your research, know what you're buying, trust your analysis. Never invest in something you don't understand. And if you're unsure, pause, ask, learn. That's smarter than gambling. What about short selling? Yeah, pros use something called short selling to profit when stocks drop, but it's risky, complex. You can lose more than you put in. So unless you fully understand it, skip it. Stick to what works. So what's the bottom line? Crashes aren't the end of the world. They're part of the journey. The stock market has crashed before, it's recovered before, and it will again. This isn't the time to panic. It's the time to position. Stay calm. Avoid the common mistakes. Focus on great businesses. Stick to your plan. And be ready to buy when others are too scared to click buy. Because the real money, it's made during the chaos. So let me ask you, what would you buy if the market crashed tomorrow? Drop it in the comments. I want to know. And if you found this helpful, hit that subscribe button. I've got more real, raw financial truths coming your way. Don't just survive, thrive. You've got this. Let's build wealth together.